everybody, Backyard Bullion here. So today I come to you from a very gloomy table, and you might well be able to hear some of the rain in the background. It's absolutely horrible here today. I've had to have the lights on in the middle of the day so that I can actually get this filmed. But today's video is going to be all about a very current affairs event which is happening over here in the UK. If you haven't caught it, perhaps outside of the UK, if your media outlets haven't caught it yet, it's the collapse of the construction giant Carillion. So it's gone into liquidation over here in the UK, and it's a very interesting topic because it's one that we've sort of seen before back in 2007-8, and previously as well with other banks being bailed out, for example. The phrase "too big to fail" has been used again and again in the last couple of weeks. So I wanted to talk about that and my thoughts on what effect, if any, it's going to have on the silver and gold markets. Also, I want to talk a little bit about the kind of stocks and shares markets being at their all-time high, and again this whole phrase of too big to collapse, and just my thoughts on that. I've got some interesting data to show you on my own sort of investments which I've got within stocks and shares, and just talk a little bit about how that relates, in my mind anyway, to my investments with relating to gold and silver. So yeah, we've seen this week the collapse of Carillion, and I guess there's no real better way to describe it than as a complete collapse. It really has just fallen apart like this. There were profit warnings all last year. There were, I think, 3 profit warnings within 6 months last year. And Carillion, why is it such a big deal? Well, Carillion is a huge government contractor here in the UK. It's not government owned, it's privately owned, but it is a very big supplier of contracts and services to the government. Anything from supplying school dinners to even maintaining MOD, Ministry of Defence, housing and things like that. So it is a very big deal that it has collapsed. There was talks last week all about it potentially collapsing and whether the government would bail it out, and the government didn't bail it out, which I think is a good thing in the end, because if you've got companies and banks which are at free rein to do whatever they like and make whatever money they can or will on their own sort of projects, and take the profits and enjoy the profits, but then get bailed out as soon as they make losses, and it just doesn't seem right for other companies out there. And if the government had bailed out Carillion, you could argue, well, where does the buck stop? It's what other companies should be bailed out and will be bailed out, can be bailed out, and so the government hasn't. So it is, as I think the chairman of Carillion said, it's a very sad day for the companies, workers, suppliers, and customers, and I think that's a very important thing to think about as well, because they employ 20,000 people in the UK. They employ, I think, something like 43,000 staff worldwide, so I read. And obviously all of those jobs will be at risk. They'll be affected in some way, certainly, whether they'll be sort of moved into different organisations, or whether they'll be completely liquidated and people will lose their jobs. That's not a good thing, and obviously it's going to be a very sad day for those employees. But not just the employees, you're looking at the entire supply chain as well. Carillion is a very big company. We're talking billions and billions of pounds worth of contracts, and of course that trickles down. Carillion would farm out a lot of these contract work to all of these other organisations and companies, some of which might be quite small, and have Carillion as one of their major contractors. And if you're a small business and you lose, I don't know, 25, 30, 40, 50% of your business from one contract, then that puts your whole company at jeopardy, at risk once again. And so it's going to have ongoing ripples in terms of the UK market. It could have ongoing political ramifications as well, because, as I said, there were profit warnings all sort of through last year, and the government decided still to choose Carillion over others as the supplier for a lot of new contracts which were being issued. So it is going to be an interesting time to see how it evolves. It is still relatively early days in that sense, but the world will go on. It's one of those things where things still go, things still happen, and we've seen the services which Carillion used to provide. Let's take a simple one. So in Oxfordshire, they would supply 18,000 school dinners every day. Apparently the Oxfordshire County Council had been planning for this collapse, planning for this eventuality, and they've said that they will guarantee the school meals. But that's a cost to the taxpayer. That's an additional cost to a taxpayer that that hasn't been foreseen. Really, I mean, it's been foreseen a little bit, but small things like they've said, they'll bring in firemen to supply the school dinners, hot school dinners. Don't know if that's a pun, but I'm reading that on one of the headlines. You know, it's just another thing that comes out from the public purse, and it's just a very interesting situation. And I guess that kind of brings me on to the next kind of part of this topic, which is about being too big to fail, and when does something become too big to fail? You know, we've seen Carillion there. They've supplied some pretty important, you know, public sector contracts, and you know, that work still has to get done. Network Rail, whilst it's not necessarily public sector contracts, you know, in terms of running our railways, Network Rail have been affected in terms of having to absorb a lot of the work that Carillion were providing, the maintenance on the railways and so on. So we'll see how that kind of goes in terms of affecting, you know, it could affect things down the line like rail prices or you know, ticket prices and everything. We just don't know, and obviously schedule of services, that's going to be affected. But in terms of being too big to fail, we've seen this all before, and it was obviously the big collapse back in 2007, 2008, the credit crunch, the huge collapse that we saw there. There were a lot of you know, institutions that basically thought they were too big to fail, and we did in fact see a lot of these institutions get bailed out altogether when they did eventually fail. One of the big ones here in the UK was RBS, and the taxpayer is still continually dealing with that and paying for that, and will be for a long time. And it's been you know, a big part of how we've had to drive our economy over the last 7 or 8 years in terms of austerity and growing out of this you know, sort of depression and everything. And it just strikes me as we're getting close to sort of that feeling again here with Carillion. It was too big to fail. It hasn't been bailed out now. Perhaps that's the breaking point. Perhaps that's the turning point of you know, a lesson for other companies to be learnt. But I still do have reservations. I have a lot of alarm bells, because we see at the moment the FTSE 100, the Dow Jones, record highs, you know, huge record highs if you think about it as well. They've really grown over the last sort of 18 months or so. And there's, you know, great things to be had from that, and I'll share with you guys what I've got here. So these two pieces of paper show the percentage gains that I've earned on some of my stocks and shares investments. So I'll just do one page at a time. So I obviously invest in stocks and shares as well as silver and a few other little bits and bobs, and I wanted to share this with you because this is an account which I've had for the last sort of 3 years. It's a fund and share account. There's not a lot of money in here. I've taken the financial values out, and I've just showed you the percentage marks. Now, I'm not a trader, I'm not an investor. This is just you know, small amounts of money which I put in these stocks and shares as a bit of a hedge against cash, a hedge against gold and silver, you know, a way to earn some dividends as well as earning a little bit of you know, basically percentage growth on my investments. These are longer term investments. These are things that I hope to keep for a good old time. However, I am kind of questioning that now, because you've seen this account here, three years, it's gained 36% value in stocks and shares, and that is very, very good, obviously. So the question is, do you cash it out? Do you have something that's grown that much in the last 3 years? Do you take it out? Because you look at the charts right now and they're just at an all-time high. Now this is another stocks and shares account, but this is what's called an ISA. So over here, this is basically a tax-free account. So any earnings that you get in here are tax-free. And as you can see at the bottom there, the total average percentage, 25% growth. But you can see in here that there's some, like this one here, the Fidelity World Index. So these are not shares in individual companies, these are funds, these are investment funds which I buy small parts in. But the Fidelity World Index, 75% growth, huge growth. You know, there's one here which is lower, sort of Junior Oils Trust, which looks at a lot smaller oil companies out there. We've seen issues in the oil industry over the last few years, so that's understandable that that one's down. But you know, some of these have grown 75% in not that long a time, 2-3 years, and it is quite quite alarming. Now, as I said, these are longer term investments. These are things for you know, buying a forever home in 20 years time, or you know, the retirement income that we want to sort of build up and have. But it does kind of beg questions about whether or not something is too big to fail. Is the stock market getting to the point again where it's too big to fail? But of course, we've seen with stock markets that they inevitably sometimes do crash, they do fail. So I guess it's a very interesting time for people. If you've got stocks and shares investments, it'd be great to hear what your thoughts are on those. It's just a very interesting time, I think. Personally, I don't think it's sort of worth panicking about. There's no major panics going on at the moment. We haven't seen a kind of huge drop-off in the stocks and shares markets from the reaction to the Carillion news. If you look at the market data on Monday when it happened, it didn't really, there wasn't a crash, there wasn't a roll on different things. Obviously shares were suspended for Carillion, but we haven't seen kind of a Black Friday or a Black Wednesday or whatever Black Day it would have been. It is just, the world goes on, and in terms of precious metal and how that's affecting precious metals, again we saw a very small spike on Monday morning, but again I suppose this is kind of small fry in the grand scheme of things, and the only real thing it's going to maybe affect is the value of the pound, which will affect obviously the value of gold and silver for us buying in the UK. But in terms of global news, I guess the Carillion story isn't really something that's going to affect and shatter world silver and gold prices and make them explode. It's not the straw that breaks the camel's back by any certain means, but it's a very interesting one to follow. It is going to have effects in the UK in terms of some of our follow-on economy. There's going to be, I think some experts said there were something like 60,000 jobs which are in the UK which will be directly affected from this in terms of the suppliers to Carillion. But you've got to think about all of the other effects to the economy. If those businesses shut up shop, if they go out of business, or if they have to scale back and make redundancies and things, obviously that's going to have effects on other local economies as well. And it's just that trickle-down effect. So it is a very interesting topic to think about. So if you have any thoughts on this, please do share it. Please do comment in this video. It'd be very interesting to find out what your thoughts are on it. If you like the video, please put a thumbs up and share it around on your social media. That would be very helpful indeed. And if you haven't subscribed to my channel already, please make sure you hit that subscribe button, and if you hit the alarm bell, you'll get a notification when I upload future videos. Otherwise, all that's left for me to say is I hope you guys have a fantastic week. I hope where you are it is nicer than it is here in terms of the gloomy, horrible, wet, rainy weather. And as always, please make sure that you like, share, comment and subscribe for more.